Bank has approved a fundraise of up to 500 crore rupees via a QIP. Now, to talk more about it, how if the company indeed plans to raise some money, we're now joined by the MD and the CEO of City Union Bank, Mr. N. Kamakodi. Mr. Kamakodi, afternoon, and thank you very much for joining in. I believe the last time the bank raised money was in July of 2014. Which means in the last 9 years, the company has not raised any capital. Every year around this time, you take an enabling resolution to raise money via the QIP, but you haven't actually raised it in the last 9 years now. Is this also just an enabling resolution, or do you think this year you actually feel the need to raise some capital?
Absolutely. The point is that since our return on equity had been continuously in the double digit, somewhere close to 14-15% at an average, and so far, the plowed back profit itself was able to take care of the requirements, and our Tier 1 capital adequacy is well above 20%. But we have made it a practice because whatever resolution you get approved by the shareholder in annual general body meeting, it is applicable, and it is valid for 1 full year. And if at all we are in need of any capital raising or any opportunity comes, we should not be in a position to start the procedural aspects again. And that's why we have made it a practice for many years. And this is also an enabling resolution. We are requesting the shareholders for the approval, and our Tier 1 capital adequacy is well above 20 even now.
So, Mr. Kamakodi, as my colleague asked, do you think this is a year where you will need some fundraise? Is that something which is on the cards? Any visibility?
See, basically, as I told you, since our Tier 1 capital adequacy ratio is well above 20%, we don't see anything immediately. But if at all any opportunity comes, any interesting, let's say the options or offers which we can't resist, if at all anything comes, we feel that we should be having all the approvals in place. And this is the practice we used to get the shareholders' approval in every AGM, and since it is valid for 1 full year, we will be having that approval on a continuous basis. This has been our practice for the almost a decade now, and as I told, it's almost 9 years since we went for a capital raising.
Got it. 9 years since your last, fundraise. Sir, so then getting back to business, could you give us an indication of how the quarter has been for you in terms of deposit mobilization, in terms of the kind of loan growth that you have seen, the outlook on margins, because last year you did see margin compression. So could you give us an indication of how business is shaping up there?
The business is going smooth, like we used to have always the first quarter subdued, and things are going in as per the usual pattern, and we will be able to give the exact number along with our first quarter results. And so far, so good on all fronts. And as we had also discussed about the margin and outlook and all earlier, immediately after our Q4 results. So things are stable, steady, and they are moving forward absolutely in the usual way. Things have been moving forward.
Okay. Mr. Kamakodi, we asked that because your net interest margins, they were under pressure in Q4. You did indicate that while you will see a credit growth of 12 to 15% in the entire year, the first half could be a little muted. Is that something that you're seeing right now? What is the outlook on credit growth? Do you maintain 12 to 15%? And what is the outlook on net interest margins as well?
Yes, the things have not changed since we discussed the progress and outlook for the financial year 23-24 in the along with our last year fourth quarter results. As I told in the past, because of we had to work with extra credit deposit ratio, and also some amount of passing in the interest rate on the external benchmark did not happen, and we explained the reasons and all, and there is no change with respect to the growth outlook and other parameters whatever we had discussed, because it is hardly about 3-4 weeks since we discussed, and everything they stay as they are.
Okay, so you maintain that growth this year will be 12 to 15%, right? What you had shared when you reported your Q4 number.
Yeah, still we feel we should be there, and it will be skewed in the second half.
skewed in the second half. Sir, last time also you indicated that slippages, I think, ended last year with a little more than 3%, but you were hoping to bring it back between 2.5% to 3%. Are you on track to do that? How are the slippages looking in the first 3 months?
Yes, we think we are exactly in the direction whatever we shared, and even sequentially we had started seeing things moderating. And in fact, when we declared for the financial year 22-23, the NPA addition minus recovery had improved by about 250 crore between financial year 22 and 23. We hope that number will be still getting better for the financial year 23-24 also.
Okay. You know, Mr. Kamakodi, in Q4, you had also indicated that banks' focus is on MSME and business loans and less on retail now. What is the current split between different categories going forward? What will it look like? And isn't the MSME a high-risk category? What do you make of that? Will that have an impact on asset quality?
See, right from the beginning, as you all know, like say, organization with about 120 years of pedigree, the focus of the organization of the founding father and throughout had been for agriculture, commercial trading, MSME and all, and our focus on funding is for the creation of business assets with less focus on the consumption. That particular strategy and focus continues, and MSME, commercial trading and agriculture together they constitute roughly in non-jewel loan category, not less than 75% or 80% of our total portfolio, and that mix is continuing. And over the cycles, again and again, it is proved that, like say, the risk-adjusted return from this segment is not as bad as it is like contemplated, and that's why every major bank is now saying that they also want to get into this area. And that's why consistently we had been able to, like say, generate an ROA around 1.5% and ROE in double digits with this focus over a period of time. And by and large, for the near term, the same composition will continue.
So very quickly, last time you also indicated that you were on the verge of finalizing BCG as a consultant. What's the big revamp, the 3-year growth plan for City Union Bank? Because you do want to up your digital lending. So what's been the key takeaway from BCG?
See, the digital lending, what we want is that now, after the arrival of various fintechs and account aggregators and so many data and all are now getting available, whatever even on the MSME front, like say, there are many data which are available on the public domain for which we have to improve the process to like say access all those information, and also fine-tune the scorecard and weightages and all in tune with the available data to take to reduce the slippages as we move forward. For this particular objective, like say, we are getting into relationship with BCG to do that, as they have already done these things for a couple of our peer banks. And we feel this will ensure that, as you said, like say, when we had 3% slippage ratio last year, and when we expect it to get it reduced to 2 to 2.5, we can even further reduce by looking into these relationships where the measurement of risk will get better and better.
Okay, all right, Mr. Kamakodi, it was a pleasure speaking with you. Thank you so much for joining us. So that's the word coming in from City Union Bank. The stock is higher in trade today. We'll do one thing.